Does real gold still have an edge over Bitcoin? Michael Burry thinks so. Michael Burry is a name that rings well in the financial industry. He is a legend in the hedge fund space who saw the 2008 housing market crash way ahead of everyone else. It is natural for us on this channel to take note of when figures like Burry have a take on Bitcoin and the wider crypto market. That's the focus of today's video, and without further ado, let's dive into Michael Burry's Bitcoin prediction.
Michael Burry made his name betting against the housing market, and he became a bit of a celebrity when Michael Lewis featured him in his book, The Big Short. But since shutting down his hedge fund in 2008, Burry has been quiet about his investments until now.
So, Paulson's big in gold, and that's something that is interesting to me, and given how I see the world playing out. But other than that, so I'm not. I'm just saying that other than gold, I haven't really bought into any of the other theses.
What do you do? Do you buy? Do you like buying? Some people like to buy the physical gold bars. Some people buy.
It's a tough one to play.
Stay tuned until the end, and we'll give you a fun fact about Michael Burry you might not have known. Michael Burry's stance on cryptocurrencies. Alright, who really is Michael Burry? This guy isn't just any financial analyst or hedge fund manager. This is the guy who, against all odds, predicted one of the most significant financial downturns in recent history. His reputation in the financial markets is, to put it mildly, legendary. He's known for his deep analysis, contrarian views, and an uncanny ability to see patterns and trends that most others miss. Now, with such a track record, you'd think he'd be all over cryptocurrencies, right? Well, not exactly. Burry has always been a bit of a wild card, and his views on the crypto sector are no exception. And where does he choose to share these views? Twitter, of course. In the age of social media, even Wall Street legends can't resist the allure of those 280 characters. On multiple occasions, Burry has taken to Twitter to express his thoughts on cryptocurrencies. And let me tell you, they're not your typical Bitcoin to the moon kind of tweets. He's raised concerns, posed questions, and offered some pretty thought-provoking insights. It's clear he's done his homework, and he's not just jumping on any bandwagon. But here's the thing. While many in the crypto community might dismiss traditional finance experts, it's essential to listen to voices like Burry's. Why? Because they offer a different perspective, one rooted in years of experience in the financial markets. They've seen bubbles form and burst, and they know the signs. Now, does this mean we should take everything Burry says about crypto as gospel? Of course not, but it does mean we should pay attention, analyze, and draw our own conclusions. After all, in the world of investments, knowledge is power, and diverse viewpoints are a treasure trove of knowledge. So as we delve deeper into Burry's predictions and views on crypto, remember to keep an open mind. Agree or disagree, there's value in understanding the perspective of one of the financial world's most brilliant minds. This video is only for entertainment though, so make sure you do your own research before buying or selling anything. This is not investment advice. Prediction number 1. The rise of gold amidst crypto scandals. Now that we are properly introduced, let's dive into one of Michael Burry's most talked about predictions. Remember that tweet that sent ripples across the financial community? The one where Burry hinted at gold rising due to some shady happenings in the crypto world? Let's unpack that. First off, gold. It's been humanity's go-to store of value for millennia. It's shiny, it's rare, and it doesn't corrode. But in the age of digital currencies and blockchain, many started to believe that gold had lost its sheen. Enter Michael Burry with a different take. He suggested that gold might just make a comeback, and the reason? Scandals in the cryptocurrency sector. Now, let's rewind a bit to 2022. The crypto market faced a significant correction. Prices tumbled, and many investors were left scratching their heads. But here's the kicker. This wasn't just a simple market fluctuation. There were whispers, then talks, and finally, confirmations of scandals. Manipulation, fraud, you name it. The once shimmering image of the crypto world was getting tarnished. This brings us to a term Burry used, contagion. No, it's not something out of a medical drama. In the financial world, contagion refers to the idea that instability or negative events in one area can spread, affecting others. Think of it like a domino effect. One bad apple, or in this case, scandal, can make the whole basket seem rotten. Burry's implication was clear. These scandals can make the entire cryptocurrency sector unattractive to investors. And when trust is lost in one investment vehicle, where do people turn? To tried and tested assets, like gold. It's a compelling argument, If the crypto world continues to be plagued by scandals and lacks the necessary regulations to prevent them, investors might seek safety in more traditional assets. And gold, with its long history of stability, well, relative stability, could emerge as a preferred choice. Now, whether you're Team Gold or Team Crypto, it's essential to understand the dynamics at play here. Markets are driven by perception, trust, and sentiment. And if the sentiment shifts due to scandals or otherwise, the market landscape can change dramatically. So the next time you hear someone dismiss gold as a relic of the past, remember Burry's prediction. In the ever-evolving world of finance, sometimes what's old becomes new again. Prediction number 2. The second phase crash in 2022. The year 2022 wasn't exactly a walk in the park for investors. Both the equities market and cryptocurrencies faced a massive correction. Now, market corrections are a natural part of the financial cycle. But this one, it felt different. It was more intense, more dramatic. And guess who saw it coming? Yep, Michael Burry. Burry dropped hints about a two-phase market crash. The first phase, it played out in the early months of 2022. But Burry's crystal ball foresaw more. He hinted at a second, more devastating phase unfolding in the latter part of the year. And boy, did the markets listen. Let's rewind a bit and talk numbers. In the first half of 2022, Bitcoin, the poster child of cryptocurrencies, saw a significant dip. From its all-time highs, it faced a sharp correction, leaving many crypto enthusiasts in a state of shock. But it wasn't just Bitcoin. Equities, which are typically seen as more stable, weren't spared either. Major stock indices tumbled, and many blue-chip stocks that were once considered safe bets faced the heat. Fast forward to the latter half of the year, and the situation seemed to go from bad to worse. The second phase of the crash, as Burry predicted, was in full swing. The equities market struggled to find its footing, and cryptocurrencies, already reeling from earlier blows, faced further downward pressure. Now, here's the thing. Predicting market movements is no easy feat. The financial world is complex, influenced by a myriad of factors, from geopolitical events to technological advancements. But Burry's prediction about the two-phase crash of 2022 stands out, not just for its accuracy but for its foresight. So, where does this leave us? Well, whether you're an investor, a financial enthusiast, or someone just trying to make sense of the headlines, it's crucial to stay informed. Markets are unpredictable, but with the right insights and a keen understanding of the dynamics at play, you can navigate these choppy waters. And as for Michael Burry's predictions, well, they serve as a reminder that in the world of finance, it pays to listen to the voices that dare to think differently. Prediction number 3. The mother of all crashes. If you are enjoying this video so far, strap in because this next prediction from Michael Burry is a big one. If you thought the previous market movements were intense, well, Burry had something even more dramatic up his sleeve. Let's dive into what he dubbed the mother of all crashes. Back in June 2021, while most of us were still trying to make sense of the pandemic's economic aftermath, Burry took to Twitter with a dire warning. He predicted a significant crash, not just for stocks but also for cryptocurrencies. And when someone with Burry's track record speaks, you better believe the financial world sits up and takes notice. But here's where it gets interesting. Burry didn't just see this as a contained event within the financial markets. No, he foresaw the potential for this crash to spread, moving from the volatile world of cryptocurrencies to the more stable Main Street. In essence, he was hinting at a ripple effect, where the tremors in the crypto world could send shockwaves through traditional markets. Now, let's talk about 2022. If you've been following the markets, you'd know that this year was nothing short of a roller coaster. But here's the kicker. There was a noticeable correlation between stocks and cryptocurrencies. When Bitcoin sneezed, it seemed like the stock market caught a cold, and vice versa. This interplay was something we hadn't seen to this extent before. And then came the capital outflow. As the year progressed, significant amounts of money began to move out of both stocks and cryptocurrencies. Investors, perhaps spooked by the market's volatility and Burry's predictions, were looking for safer havens. This capital flight further exacerbated the market's instability, leading to even more significant price drops. So what can we take away from all this? First, the financial landscape is evolving. The lines between traditional markets and newer, more volatile sectors like cryptocurrencies are blurring. And as they do, the potential for larger, more widespread market movements increases. Second, and perhaps more importantly, it's a reminder of the importance of diversification. In a world where market sectors are becoming increasingly interconnected, spreading your investments across different asset classes can be a smart move. And finally, always keep an ear to the ground. In the fast-paced world of finance, things can change in the blink of an eye. But with the right insights and a keen understanding of market dynamics, you can stay one step ahead. Burry's concerns about leverage in crypto. Now, let's shift gears a bit and talk about something that's been on Michael Burry's radar for a while: leverage in the crypto sector. If you're scratching your head wondering, what's leverage? Don't worry, we'll break it down for you. Leverage, in simple terms, is like using borrowed money to amplify your potential returns in an investment. But here's the catch. While it can magnify your gains, it can also amplify your losses. And this is where Burry's concerns come into play. Burry has been vocal about the excessive use of leverage in the crypto world. He believes that many investors, lured by the promise of quick and substantial profits, are diving headfirst into crypto without fully grasping the risks associated with leverage. And when the market takes a downturn, those using high leverage can find themselves in a world of financial hurt. The key takeaway here: if you're considering diving into the crypto pool, make sure you understand the depth. Leverage can be a powerful tool, but like any tool, it needs to be used wisely and responsibly. It's not something we suggest for most traders. As always, do your own research. So, what's the big advantage gold may still have over Bitcoin? Any issues or contagion within the crypto sector could affect Bitcoin's price negatively. This is something gold investors don't have to worry about. And that fun fact about Michael Burry: his Twitter or X account is called Cassandra BC. Any idea why? Cassandra was a priestess and daughter of King Priam, who was never believed despite always telling the truth and having the gift of prophecy. Just like Burry making accurate predictions that people sometimes laughed at him for, like in 2008. If you like this video, be sure to subscribe and hit that like button. We'll see you in the next one.